All right. Hello, everybody. I hope you're doing well. My name is Jeff Gibby. I'm going to read a legal disclaimer. So let's go ahead and get to it. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I'm glad we got through that. I hope you're doing well. We have a great presenter today. Steve is somebody I consider a good friend, somebody I've learned a lot with, somebody who I like to run his scans that we developed over the course of several years, and just an overall great guy. I want to welcome you guys to the event. I hope you enjoy the presentation as much as I'm going to. Steve, I want to welcome you here today. How are you?
Doing good, doing good.
All right.
Nice
Let's get some
spring day.
Yeah, it's beautiful outside here. Let's go ahead and make you the presenter real quick.
Okay, show my screen. Show screen. And I forget which one it is.
The one we can, go ahead. That's the one.
That's
Perfect.
the one, all right. Okay. All right, welcome everybody. I've got the question and answer chats or chart set up, so if you have questions as we go along, feel free to ask them. But we're gonna, we had set this one up to identify the powerful trades or the power signals. And the reason for that is through the years, I've discovered that approximately 70% of the trades that I do based on candlestick charts will work positive. Now, some of them work positive by 0.3%. Others work positive by 300%. That also tells us that 30% of the trades don't work. Now, that's not a bad statistic because no matter what trading strategy you use, if you can get 70% of the trades to work, you're going to make a lot of money. But the other side of that coin is you have to know what to do exactly with the 30% of the trades. And that's what candlestick analysis does for you. It tells you when the trade is good, and it tells you when to get right back out of a bad trade. So that old proverbial sage advice that everybody gives you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlestick analysis makes that very simple. So we have been able to pick up some huge profits based upon candlestick breakout and what we call RARE. And RARE is research analysis, reverse engineering. In the past, I've told people you don't have to know why a stock price is going up because that's already built into the candlestick chart. Everybody that's making a decision is telling you they're either buying or selling. That's what the charts illustrate. But recently, we've changed that to this research analysis, reverse engineering, that if we see a breakout and see that it's a candlestick buy signal, we can go back and see why that signal or why that breakout occurred. So we just go back and see what the news was that created that breakout to see whether it warrants going up further. Now, if a breakout is created by a company or an analyst upgrading a stock, that doesn't change the investor sentiment. That just temporarily changes the supply and demand. When we look up something like this, we had made a lot of money in OCGN, started buying it at 73 cents when it broke out and got rid of it up here at $17 plus. That's because we could see what they announced here warranted that there was going to be more upside. Same thing with over here. So that combination of identifying a strong signal and understanding or researching why that signal was created by by just going back and checking the news, that puts you in situations where not only are you alerted to be in that trade, but then you can see whether that trade, because of that breakout, has more upside. So again, anytime we see a pattern, like a fry pan bottom, what do we expect coming out of a fry pan bottom? A strong price move. But we can enhance that probability that as soon as we started seeing it break out, we could go back and find out what the news was that created that breakout situation. So we also can stay in, and this is one of the important factors of candlestick analysis, we can stay in a trade based upon the T-line rule. And the T-line rule is very simple. If you see a candlestick buy signal and a close above the T-line, you can stay long as you don't see a sell signal and a close below the T-line. Now that "and" is important. Sometimes you're going to see a sell signal, but if it doesn't close below the T-line, you stay with it. Sometimes you see a close below the T-line, but it's not a sell signal. You wait to see what it does the next day. If it comes right back up, you stay with that position. It works effectively, and so I'll use this chart for people that haven't seen my presentations before. The moving averages that we have on our charts are the red is the simple day moving average, the 200-day simple moving average. The blue is the 50-day simple moving average. And the reason we put those on our charts is because every major money manager around the world uses those moving averages to make their decisions. We're not using them to make our decisions. We're using them to see what everybody else's decisions are at those levels. The T-line is the most important indicator on this chart, confirming indicator. Number one, the candlestick signals are the reasons for identifying changes of investor sentiment, or the cause for identifying change in investor sentiment. The T-line has a very simple rule. It acts like a Fibonacci characteristic, a natural support and resistance level of human nature. So the logic is very simple. If you see a candlestick buy signal and a close above the T-line, the natural support and resistance level of human nature, that combination gives you an extremely powerful trading platform. Now, I say powerful platform because it takes the emotions out of your trading. I can bet you dime to donuts that everybody watching this has taken profits because they had profits. Had nothing to do with what the trend was doing, and it's that fear factor. That fear factor I had all myself before candlesticks came along and the T-line came along. That fear factor is, boy, I finally got a profit. I would sure look stupid if I let it go back to be a loss. So you take profits. The T-line keeps you from doing that until it's time to take profits. Same scenario on the short side. If you see sell signals, a shooting star signal, an evening star signal, 3-day signal, big up day, a day of indecision, a big down day that closes below the halfway point of that first big up day, that's your evening star signal, one of the 12 major signals. So I guess I better backtrack a little bit more for anybody new in here. There's about 50 or 60 candlestick signals. But you don't want to, or you don't have to learn all 50 or 60. Through the last 40 years, I narrowed down what I call the 12 major signals, 6 longs and 6 shorts. The reason I call them the 12 major signals is you don't have to spend mental time and energy learning all 50 or 60 signals, because some of them you won't ever see, or you see them so rarely that it's not worth your time, your mental time and energy to learn them. If you learn the 12 major signals, again, 6 long signals, 6 short signals, you'll have more trades than you'll ever be able to handle. Plus, you'll have a much more stronger grasp on the rationale for why prices move up or down. But what is a T-line? Yes, a proprietary indicator. It's the 8 exponential moving average. We call it the T line because we couldn't figure out whether we wanted to call it the trigger line, the trade line, so we just use the T line. So you put the 8 exponential moving average on your chart just like you would the 50-day simple or the 200-day simple. So very simple T line rule. You can stay short when you see a sell signal and a close below the T line until you see a candlestick buy signal and a close back up above the T line. You'll be surprised how that definitely keeps your emotions out of your trading and will dramatically improve your profitability. So the logic is, if the candlestick signal tells you what's going on in investor sentiment, that sentiment won't change until the T line is breached in the other direction. So this is what we call power trades. Being able to recognize as many things on the chart that would illustrate that there's a change of investor sentiment. And look where this one occurred. Right smack dab on the 50-day moving average. Now, what does that tell us? That tells us our charts, or our signals told us that's where the buying was. We could see exactly when they were coming back in. This is not an uncommon move, price move. They come up through a resistance level, they pull back to the resistance level to see if they're going to act as support. When it acts as support, we can see that immediately. Now, what do you think the rationale or the investor sentiment is when they see it supporting at a major moving average? They're all saying, oh, it's supporting at a major moving average. I've got much more confidence to buy. So they're buying up here. We're already in down here. Now, if we see something major like this, especially coming off a support level, that's where we use our research analysis, reverse engineering, go back and see what created that price move. So the more things you can put into your analysis, we call that convergence analysis. You can see everything happening in here. There's your little buy signals. Dojis, there's your confirmation, a doji sandwich. A doji sandwich is very simple. It's usually a bullish candle followed by a doji. And we have the doji rule, which is the price will usually move in the direction of how they open after a doji. So if we're already seeing that the stochastics are coming up and they open positive after a doji, we know they're probably going to trade positive, creating that doji sandwich with the doji sandwiched in between those two big candles. And we can see what the trajectory is, kind of a rounding bottom or a scoop. And what makes that a scoop? Because now we can see, as this is starting back up, there's a flat handle right here. And if this is a scoop, what do we expect out of one of the scoop patterns, which is one of the about 8 patterns that are created by human nature? It's usually a slingshot effect to the upside. So where could you be buying? You could be buying down here, or more conservatively, you could be buying up here after it broke out. And then how long do you hold on to this position? Until you see a sell signal and a close below the T line. With the caveat that the Japanese rice traders just use very simple common sense when they use the graphics on the candlestick charts. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. So we stay long until we see prices might get too far away from the T line. So there's your best friend signal. Call this the best friend signal because it's a doji followed by a gap up. So what's the analysis of this chart? If a doji represents indecision between the bulls and the bears, a whole series of dojis represents a ton of indecision. And what's this signal tell us? They told us what their decision was coming out of that big indecisive time frame. That's when you can be buying. Now, very simple logic from the candlestick rice traders. Where do you buy a candlestick buy signal? In the oversold area. That's their logic. If you see a candlestick buy signal in the oversold area, the probabilities are there's a change of investor sentiment. It's going to head up. Where do you buy a pattern breakout? Pattern breakout usually has the stochastics up in the overbought area. My stochastics I have at 12.33. That's because I'm a swing trader. I hold my positions anywhere on average from 2 to 10 trading days. So if I'm seeing a buy signal in the oversold area, I can be buying. If I see a pattern breakout in the overbought area, I'm not concerned. If I see a price move, nah, I'll get to that later. But how long do we hold on to this position? Look what this candle was doing. Look how far away you are from the T line. This is where we do our next process, which is if we're that far away from the T line, now we flip to our 10-minute chart. And that is part of the fractal movement of prices. That candlestick charts look exactly the same on a 1-minute chart, a 5-minute chart, or a 10-minute chart, or a daily, weekly, or monthly. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. I used to trade the E-minis off a 1-minute, 3-minute, 10-minute time frame. I trade futures right now off using the 10-minute chart as my day trading time frame. And I use the daily charts to trade stocks on a swing trade basis. So all this basically does for us, not basically does, what this does for us is it tells us when there's been a major change of investor sentiment, and we know exactly what that tells us because of the signal. So this is what we call 2+2. Price moved up, pulled back, indecisive, and then we did a best friend signal. What's the 2+2? It never closed really below the T line. 2+2 just means you could add a bunch of things together and get 4. They did a best friend gap up off the T line, broke through this resistance level, and what would this tell us? There's wave 1, there's wave 2, there's wave 3 of our J-hook pattern. J-hook pattern has a very simple mathematical calculation. Wave 3 will usually be the same magnitude as wave 1. That's because human nature works the same way time after time. What is 2+2? Just an expression to say you're adding everything together that you can visually see here, that you've got a best friend signal, couldn't close below the T line, a breakout through this level, and setting up as a J-hook pattern. You add all that together, the more pieces of information that you can visually recognize, the higher the probability you're recognizing a strong price move. 2+2, there's your J-hook pattern. What's the J-hook pattern tell you? It pulled back, and where did it pull back to? Right here to the T line. Now, that is relevant because nobody has the T line on their charts. Well, statistically, nobody. But it acts like a natural support and resistance level. Using it with candlestick analysis, if you see it pull back and start curling up, we know we've got our next pattern in progress. Wave 1, wave 2, wave 3 of our J-hook pattern. And look what the breakout did. They gapped up right to this resistance area, did a doji. And again, remember what our doji rule is. It's going to move in the direction how they open it. When they trade it positive, what do we know that this candle is likely to do? Be the same magnitude as this candle, giving you a doji sandwich. And what do we expect from a doji sandwich? More upside. That's the statistical probability coming out of a doji sandwich. If that broke to the upside, what's that telling us? Telling us our J-hook pattern breakout is in progress. We can be buying right here, knowing that everybody else is going to start coming in later when they see that it's still in an uptrend. So the doji rule, very simple. If you see dojis in a bullish confirmation, it's going to move in the direction how they open after a doji. Or if you're doing a doji sandwich, if you see this happening and it opens positive the next day, you can be buying immediately because you know the probabilities are pretty strong that this candle body is going to be the same as this. So this is where you add up all that information. Look where all this indecision was occurring, right here on the 50. Doji, then bullish confirmation of a doji and a close above the T line. You could be buying on this day. Well, it's a doji day, so what do you want to see the next day? It opening positive and trading positive. There's another doji sandwich right there. That's just telling you there's going to be more strength to the upside. So one of your strongest signals is the kicker signal. It has a gap already built into it. Kicker signal opens here, closes here. Then the next day they open it at or above the previous day's open and go positive. That tells you the investor sentiment was dramatically kicked in the opposite direction. Now you add that to a big fry pan bottom. What do we expect at the end of a fry pan bottom? A strong breakout. And if the kicker signal is your strongest individual candlestick signal, you know you have a breakout of a fry pan bottom, even though you might be up toward the higher end of your stochastics. What do we expect coming out of a fry pan bottom? A big price move. Now, that's great for trading stocks, or look what it does if you're trading options. Can you imagine what the premiums are on these options when it's moving sideways for this time frame? Nothing there, which means as soon as you see strength coming out of this fry pan bottom, you get in early before the intrinsic value heads up and before the time premium starts building up. This puts you in situations where not only is a stock trade going to be very profitable, but gives you the exact timing to be in a good option trade. So this is what we call a bullish flutter kicker signal, again with the doji. A dark candle right here on the 50 in this case. They gap it up and do a doji. Again, what's the doji rule? Doji rule is very simple. If it opens positive, it's going to trade positive. Why would we be inclined to think it was going to trade positive? Because look what your stochastics were doing. They were coming up. So even if you didn't catch this, and at night you did your scans, which I'll let Jeff show you how to do the scans. If it opens positive, you can be buying stocks, calls, whatever you want to do immediately because the probabilities are extremely strong that you are in a bullish flutter kicker signal. Now remember, the kicker signal is your strongest individual candlestick signal. We call this a bullish flutter kicker signal because if you took this little flutter out of here, you have a kicker signal. Do you recommend studying Elliott Wave in depth? No. Jose, Elliott Wave had one significant relevancy, and it showed that prices move in waves. That's about it. I forget his name that started Elliott Wave, but he even said there's no set patterns to it. The normal was a wave 1, wave 2, wave 3, wave 4, wave 5. And then you could have a pullback of an ABC. But he said you could also have a wave 1 through 7, or you could have a sideways wave of multiple. The factor that we use is we're not counting the waves as an Elliott wave. We're just counting the waves that if this was wave 1, this is wave 2, and they start the next wave, this is wave 3. If it comes up here and backs off and then starts back up, this becomes wave 1, wave 2, going into wave 3. So Elliott Wave is the significance was that it pretty much reminds people that prices do move in waves, and that's based upon human nature. So a trend kicker is, there's our fry pan bottom. Notice it opened here, closed here, and then they gapped it up at the previous day's open and started going positive. That tells you this pattern is still working. It just puts you in, it just tells you there's a lot of strength in this uptrend, especially coming out of a fry pan bottom and then doing a trend kicker signal. Now, a kicker signal is when they reverse it at the bottom. That's kind of a little kicker signal. A trend kicker signal is when the trend has already started and you have a dark candle and they gap it up above the previous day's open and go the opposite direction. This is all information that when you learn candlestick analysis, it's just common sense that if you see something like this, you know the strength is still in that uptrend. Whoops, I'm trying not to go over time here. So 2 plus 2. Doji, and notice what else we could recognize. They couldn't get up through this level. You're up in the overbought area, and then you see a close below the T-line. What did that tell us? They couldn't go up any further. You could start going short. Again, I always reiterate that this is not rocket science. This is just studying how price movements usually occur. You don't have to know formulas. You don't have to know technical analysis. All you need to do is recognize what normally happens in human nature. And that's what the graphics of candlestick charts tell us. So here's the power moves. If a doji, that's indecision, and they gap it down, that's a powerful indication to tell you they want to be out of that trade after that indecisive day with great enthusiasm. Same thing here. Doji gap down back to the T-line. What's that telling you? You're in wave 3 to the downside. So why would you start taking profits up here if you saw a doji, even though you don't have a confirmed sell signal? Because you're in the overbought area. And what's our T-line rule? The further away you move from the T-line, the higher the probability it's going to come back and test it. And for some reason, I didn't have those on there, those charts on here. That's the caveat to the T-line. The further away you move from the T-line, whether on the sell side or the buy side or the bullish side, once you start getting that far away from the T-line, and a lot of people say, is there a percentage? No, it's just visually recognizing that the T-line is now and not anywhere close to the price. Does the 8 exponential moving average as T-line work on 1 minute? Yes. Works on all time frames. So you could be, well, this wouldn't be a 1 minute chart because you got gaps in it. But a 1 minute chart would look just the same as a daily chart. There's no difference because of the simple definition of a candlestick signal. It's the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is 1 minute or 1 month, all depending on the time frame you want to be trading. This is your Morningstar signal. We were buying Hecla. You can see it wasn't going anywhere until, look at your Morningstar signal. Now that acts like a mini scoop pattern. There's your little scoop. There's your flat handle. Didn't execute. But what executed this? The best friend gap up and breaking through this level. So what's your total analysis of this chart? A scoop pattern, Morningstar signal, followed by a best friend signal, stochastics coming up. That puts you in the right direction at the right time. The gaps, I emphasize to people use candlestick signals and gaps because through the years, I've heard so many money managers say, stay away from gaps. You don't know what they're doing with the price. With candlestick signals, you know exactly what they're doing with the price, and you want to be taking advantage of that. If you see a candlestick signal and a gap, that not only tells you what the decision was, but the new decision has got great force to it. It's also used for taking profits. Where do most people sell? They panic sell at the bottom. So yesterday, with the market opening down, space you can see was trading lower, and when it gapped down here in the oversold area, if you were short, that was an excellent place to start closing out your or taking profits on your puts or closing out the stock. Same thing with, I think this is Daku. When it gapped down in the oversold area, that's where you start taking your profits. Just simple logic from the Japanese rice traders. Where do most people sell? They panic sell at the bottom. How do we know of a panic sell? Because they're gapping it down in an oversold condition. So very simple logic. If you see at the end of a downtrend, they're gapping it down, that's where all the panic selling is going on. And I always ask myself, because I was always that panic seller before candlesticks came along. You ask yourself, if this news is so terrible and everybody's selling it, who the heck is buying it? Well, it didn't take me very long after candlesticks came along to realize it was the smart money that's buying down there at the bottom. So I used to be the seller down here. And what made me such a good candlestick trader was I just knew that I was doing everything backwards. All I had to do was reverse my thinking 180 degrees. Now I'm either shorting up here and covering shorts down here and buying versus being the person that is holding long like I used to and saying, oh man, when are they going to turn this around? When are they going to turn this around? I can't stand the pain anymore. That's where I'm selling out. Bingo, another one. When you see you're in the oversold area and they're gapping it down, if you were short, you start covering your short position. So here's the convergence analysis. Look at your double bottom. And how is the bottom forming? Doji, 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 bullish engulfing signal. And then they gap it up. What'd that tell you? There's been a dramatic change of investor sentiment. I don't know what it did today, but yesterday when the market was selling off, it was still trading up. Essentially, using the candlestick information allows you to be in situations where the market is going to be less relevant to what the price move is, because this is a buildup of investor sentiment that's already taken into consideration what the market's doing. So they were still buying it yesterday. Here's another one where you improve your probabilities of being in the right place at the right time. A fry pan bottom, what do we expect? A strong price move. A J-hook pattern, what do we expect? Wave 1 and wave 3 will be the same. But this is a bubble breakout, which is the same as a J-hook pattern, except it's got much more defined analysis. Look where it failed, the first wave, right smack dab at the 50. Why do you think it failed there? Because everybody and their brother was waiting to see what it was going to do at the 50. And it did a doji. What did that tell us? There was indecision. If we were long, what did we do the next day? We closed it out because of the doji rule. Now we could get ready to buy it back, because if it's coming back up through this level, we've got a J-hook pattern. If it's coming up through this level, what's it telling us about the 50? It's not acting as resistance. Now we can see that it's supported right on the T-line, but nobody else has the T-line on their chart. So we're ready to be buying right here as it breaks through at this level, knowing that we've got a J-hook bobble breakout that's supported on the T-line. We're buying right here. What's everybody else waiting to see? Well, it's going to stay up above the 50, and that's what adds to our profitability. So essentially, this is what we call the classic pattern. A fry pan bottom creates a strong price move. Then it pulls back and does a J-hook pattern, and wave 3 is usually going to be the same as wave 1. We call it a classic pattern because that's the normal price move, or the price movement of human nature. So remember, the kicker signals have the gaps built in, and the gaps are what are telling you exactly what's happening after a signal. DDD yesterday, this became a very simple trade. A lot of people in the chat room were buying it, because as soon as you see a kicker signal that's gapped up above the previous day's open, what can you already assess? The fact that there's been a drastic change of investor sentiment. That's when you can be buying it. Now, do you buy it here? Do you buy it here? Do you buy it here? That's where you go to the 10-minute chart. As long as the 10-minute chart says it's still heading up, you can continue to buy it. IGT, there's your kicker signal. There's your J-hook pattern. There's your breakout. Just adds everything together to tell you you're in the right place at the right time and you're seeing a lot of bullish strength. This one was the example of a bullish engulfing signal. Look where the big breakout occurred on, we call this Nimrod. I don't know what the real name of it is. But look where it moved from here, and I can't see the number, $4.50, got as high as, looked like 16, backed off. So here's some simple logic. I'm going to kind of step out here a little bit. If you were buying this during the day, and then it opened here and started trading higher, you have two ways to take profits. One, look how far away you are from the T line. Now, that just tells you common sense that if your stock has gone from 4.5 to 16, what's somebody going to do? They're going to start taking profits. How do we see when that's starting? We just flip to our 10-minute chart. And as long as this keeps trading above the 10-minute T line, you stay long. But as soon as you see a sell signal and a close below the T line, you take profits. Why do you use the 10-minute chart? Because the daily chart is already telling you you're way too far above the T line. What does a left-right combo mean? A left-right combo is, did I do that earlier? It's going to be the next one. I'll show you on the next slide. But it's a bullish engulfing, depending on whether you want to consider this a doji or not. Look where the bullish engulfing occurred, right smack dab on the T line. What did that tell us? That if this traded positive, you got a J-hook pattern in progress. Today it closed up here somewhere. It was up about $1.10. But why would we be trading that J-hook pattern in a market that's just fallen out of bed? Because this told us there was a new dynamic in this stock. They took profits. Now they're coming back in to take care of that new dynamic. This is a left-right combo. Got a doji, doji, a doji, followed by a bullish engulfing signal. Now, a bullish engulfing signal is one of your 12 major signals. There's a definite reversal signal. However, it's enhanced when it's a doji followed by a bullish engulfing signal. One of the simple rules of candlestick analysis is if you've got a doji in a multiple day signal, that's usually a little bit more powerful than just a bullish engulfing after a regular down day. So a doji followed by a bullish engulfing signal is one of your top reversal signals. And I think this one even today was trading up with the market off 600 or 700 points on the day. So this is stochastic coming out of the oversold area, bullish left-right combo. Where do you think your first likely target's going to be? At least up here. Then there's a wee little gap right there. Look at your kicker signal that continued your downtrend. 2 plus 2. There was your Morningstar signal. This is what we call a McMuffin. A Morningstar signal, which is the third day needed to close above the halfway point, which it just did. Then it was followed by a doji sandwich. Now, a Morningstar signal, one of the 12 major signals, is a high probability there's going to be more upside. A doji sandwich tells you there's probably going to be more upside. So that's a double whammy for telling you there's going to be more upside. So you got a Morningstar signal followed by a doji sandwich. We call that a McMuffin, your morning sandwich. That's a very high power, high probability trade reversal setup. And then look what happened right here at the resistance level. This is what we call a T-line crunch. You can see where the resistance level is. Each time they pulled back, they couldn't close it below the T-line. You can see how the T-line was just crunching this price up through the resistance level. So these are all just simple observations that the Japanese rice traders have provided for us of how human nature normally reacts. So this one is a piercing signal. And this is what we call 2 plus 2. This is a little bit more powerful than just a down day that didn't do anything. Why? Because it did a piercing signal, which opened below any of the previous day's trading, the body or any of the shadows, and closed more than halfway up this candle. But what makes it more relevant is look how far down they opened this before they brought it back up. So got buyers, sellers, buyers, sellers, buyers, sellers, and then they wipe out all the sellers and the buyers take over. That means they've taken out a lot of sellers. Any buying from here is not going to have as many sellers in the way. Usually starts the uptrend. J-hook pattern, there's your doji gap up. What do we expect coming out of this J-hook pattern? Wave 3. Wave 1, wave 2, wave 3. Just high probability trades. So here's the Dow. Now we've been short a lot of stocks because the NASDAQ over the last 3 weeks started selling off. It did a sell signal and it was selling off, which was an unusual situation in most market conditions where the NASDAQ is selling off hard and the Dow is still heading up. So as the Dow was heading up over the last couple of weeks, the NASDAQ was heading down, which made it very simple. When we recommended portfolio trades, we said to have both long and shorts on in the portfolio because there was whole sectors like the high-tech stocks that were being sold off, producing good short positions. And there was other good stocks like the steel stocks and the mining stocks showing good strength. But how long was the uptrend going on the Dow? There was a shooting star type day. And look what else it did when it touched this level. It hit the very top of this channel and started selling off in the overbought area. And then yesterday, they gapped it down. Now remember, anytime you see a sell signal and a gap down, that's telling you that they've got a lot of force to go in that direction. Today, I did this before the close when it was only down 500 points. It actually closed down 680 points. So where do you think the next likely target is that everybody's watching? Down here. So you've got a strong sell signal, and they're selling it off hard. They're selling off the Dow, the NASDAQ, which bounced up yesterday but didn't do a reversal signal. And they actually opened the NASDAQ today at its low and traded lower. So what's that tell us about investor sentiment? They're definitely selling it off hard. And that's, in the old days, I'd be sitting saying, oh man, when are they going to turn this around? They're killing me. That's because I wasn't short. Now I know when I see that sell signal to start adding short positions. So on a day like this, I'm just happier than a pig in doo-doo because I've got enough short positions that are producing big profits. This is what allows you to be in the right direction at the right time. Just putting all your stars in alignment. If you can see what the market indexes are doing, you're seeing sell signals, then you just go scan for sell signals and try to find the strongest selling sectors. And then you go to those sectors and find the strongest selling stocks. That's basically putting all your stars in alignment of being in the right place at the right time. Lennar, shooting star, doji, gap down, good profits. Now, yesterday or a few days ago, they were buying, I think this is Car Gurus. You can see the gap up, and this was yesterday's chart. Yesterday, the markets were selling down. This one was continuing up. And the reason I point this out is because the signals are created by investor sentiment, it's usually going to carry through no matter what the overall market is doing. It disregards what the market is doing. Oh, there's Nimrod today. So there was your bullish engulfing signal. There was your trading today. What are the prospects? J-hook pattern. If this was wave 1, wave 3 could take you up here. Now I say could. It gives you the probabilities that they're coming back into this for wave 3, which is the normal reaction of a human or investor sentiment. We can see what type of pattern it's creating. It just puts us in the right place at the right time. Oh, we did this one also. Left-right combo, this is what it did today. So the market was off huge. That reversal signal said they were buying. ET, unfortunately, ET backed off. You can see the fry pan bottom. It was trying to do a J-hook. It closed down here at the end of the day. We're still waiting to see if it can do a J-hook pattern. So anytime we see the sell signals, again, there's 6 short signals, 6 long signals. But there's a bearish engulfing signal in riot, closed below the T-line. That might be where you cover your short position. Came back up to the T-line, what do you got? A bearish engulfing, trading lower. Wave 1, wave 2, wave 3. Apple. There's kind of your bearish engulfing. This is what we call a belt hold signal. A belt hold signal is when they gap up way out of the trading range and come back into the trading range. The Japanese rice traders call it a belt hold because the 2 wrestlers are fighting. One's trying to back out of the ring. The other one grabs his belt and pulls them back in, and they're back to fighting. You can see where Apple opened today at the low or the open of the previous day. That tells you there's still lots of powerful selling going on. Where's your first likely target? There's a gap right down here they could be heading for. The bigger the signal, the more compelling there's been a change of investor sentiment. So as you can see, this is kind of double doji sandwich. That implies there's more downside. So this is all coming from the worst investor in the world. Before candlesticks came along, I was a stockbroker for 8 years, and I couldn't hit my butt with either hand. What I did discover was the brokerage firms had no more idea what made prices go up or down. And when I came across candlesticks, every time it took 3 months for somebody to badger me to look at candlestick information. When I did, the first thing that struck me was, this makes sense. Everything I learned on a candlestick chart says, yeah, I knew that. I've just never seen it in a graphic formation. There's a kicker signal. This is what this stock did today. The markets have been horrendous for the last few days. Look what the kicker signal does. It tells you there's a lot of strength there. So basically, with candlestick analysis, you've got a very simple process, simple scanning techniques to identify the powerful trades, which are basically going to put you in the right direction at the right time, a vast majority of the time, number one. And number two, if a trade doesn't work, it shows you when to close it out immediately and go on to the next one. So with that, guess I better go back. Are there any questions that I didn't clarify well enough? Jeff, was there anything coming off of?
No, we had some questions, but not too many. Norman wanted to know if you were looking at daily candles. I told him you primarily were. Metastock wanted to know who is the worst investor in the world.
No, I was the worst investor in the world. I was a stockbroker. And the reason I became so good at candlesticks is because I could see everything that I did exactly wrong. I was the seller at the bottom, and every time I finally got confident that a stock was going up and I put my customers in it, it would immediately turn around and go the other way. And I kept thinking, how come every time I buy something, it goes the opposite direction, or every time I sell something, who the heck is buying this crappy stock down here and it goes up as soon as I sell it? And when candlesticks came along, I finally realized that investor sentiment is what moves prices, because I was part of that investor sentiment. I was the one selling at the bottom or buying at the top. So made it very simple. All you have to do is turn your thinking around. And this was the major benefit for me in candlesticks analysis. It kept my emotions out of my trading. And that's the biggest bugaboo that most investors have, is their own emotions.
Let's see. I was wondering, here's a question for you, Steve. Do you have a favorite pattern?
To put it more on a broad scale, we've got 6 candlestick buys, 6 candlestick sells. There's about 8 candlestick patterns, and there's about 18 that we call top rank signals and patterns. And that would be something like the best friend signal, which is a combination of a doji gap up or the left-right combo or a kicker signal. So my favorite patterns are the fry pan bottom breakout and the J-hook pattern. Now, even more concise on the J-hook pattern, if I see that the failure was initially at a resistance level, like a moving average, and it pulls back to the T-line and starts back up, I will buy that as soon as it breaks out, because of the J-hook pattern, more defined as a bobble breakout. And the reason that's more defined is everybody's watching to see what is happening at the 50 or the 200, the breakout level, where we already have the advantage of seeing that it held up at the T-line. So I will go after a J-hook pattern, bobble pattern aggressively, because I know everybody else is watching to see what happened at the breakout level. If I see a kicker signal, I will buy immediately. If I've got the funds available, I'll just flip to my 10-minute chart to make sure it's heading up, because I know the results of a kicker signal is twofold. One, it's going to move in the right direction with a high degree of probability. And 2, the magnitude of that move will usually be very huge. And then if I see a best friend signal, the doji gap up, especially coming out of the oversold area, I'll buy that immediately, because we call it the best friend because it also has an extremely high probability the price is going to move in the right direction and with great strength.
Okay. Arthur says, thank you so much. And he liked it so much, he's put like 6 O's in his so.
Okay.
So. And then Lee says, excellent training. Thank you, Stephen. He also says, I always want to sell my short position if I see a white candle forming. How can I trust that a stock is still going down?
Because of the signal. Just because a price goes up doesn't necessarily mean it's a reversal. And let's see, if you're in a downtrend, and just because there's a day where the price goes up, if it's not doing a reversal signal, and especially not doing a reversal signal in the oversold area, if the stochastics are still heading down and you see a kind of a bullish candle, that's probably just a bounce that day. So the logic is you stay short until you see a candlestick buy signal confirmed. And we saw a lot of stocks. I can't remember. Did I have space? Yesterday, there was a lot of stocks that did bullish engulfing signals in the oversold area, mostly over in the NASDAQ related stocks. But there were stocks also that had bullish candles, and space is one that I can think of right offhand, where it gapped way down and came back up and closed right about where it closed the night before. So that had a very significant factor. If it opened positive, that told us there was a reversal. If it opened lower, the downtrend was still in progress. So even if you see a bullish candle, if it's not a reversal signal, you stay short until you see a signal.
GSV in YouTube wants to know, Steve, what do you look for first in a chart when you're looking at charts?
What do I look for first? I don't know how to answer that. When I wake up in the morning, if I think the market is in a trend, and right now we know that the markets are in a downtrend, at night, I would do my scans looking for the best short positions. Now, on any given day, whether the market's going up, going down, or going sideways, you're going to be able to find 5, 10, 15, 20 good chart patterns. Remember, there's 9,500 trading entities out there. With very simple candlestick scans, you're going to find 10 good bullish signals, whether the market's going up or down. You're going to find 10 good bearish signals. So if I wake up and I think the market's going down and I've already scanned the night before and found 12 good stocks that could be shorted on weakness, that's what I'm watching for the next day, is to see how the market is opening. So if I wake up and it shows the pre-market futures are showing the Dow's going to open up down 200 points, I know that I'm going to probably be adding to short positions.
Okay, perfect. Mike said, or Lee, I'm sorry, said earlier, or said thank you for answering the question earlier. And I don't know why that was so hard for me to actually pronounce, but in any case. Let's see, Mike wants to know, is this being recorded, and is Jeff going to show how to scan for signals in Metastock? And so, Mike, I'll answer that. Yes, we're recording this. You're watching in the GoToWebinar room. What's going to happen is within an hour of us getting done here, we're going to send you a link to the YouTube channel. What I would recommend that you do is make sure to like and subscribe to our YouTube channel. It helps us out a great deal, and it's also worth good karma, is what I hear. So, but yeah, we'll send that to you within an hour, and I'm going to go show us the scanning, I think, right now, because we're out of questions for Steve.
All right,
Steve, great job today. I really appreciate your coming in. I appreciate your working. For me, if somebody was to ask what my favorite Steve Bigalow pattern is, but hands down, it would, I think, be the Doji best friend. So that's the one I'm going to show the how to scan for.
Okay. Well, thank you for the invite. If you watch, and I'll put a plug in for you all for Metastock. I've been working with Metastock. How long have we been working together, Jeff? Over a decade.
A decade. Yeah, over a decade.
Yeah. And they've got the best charting setups that even if you don't know what the signals are, you can look at a chart and it will label where the signals are. So, and then not only label the signal, if you want to know what that signal is, it's got a description of that signal. So I'm probably taking the wind out of your sails here, Jeff. I'll let you show everybody this.
You're doing great, Steve. I really appreciate all of the great work you've done with us over the years, and the patterns. I absolutely love them. So thank you for helping us get them into Metastock.
No problem.
And let me go ahead and go over here. Thank you, Steve.
Yep.
All right. Let's go ahead and do this. We're gonna go ahead and just kind of transition a little bit here. I'm gonna do that and that and this, and then you should be able to see my my home studio here, or my studio, my basement, really. Hopefully you can also see my screen. Let me go ahead and just make sure real quick that I'm sharing the right screen. And what I've got is a stock open. This one is actually just Davis car. It's had a nice run up. Looks like it's over. Wanted to kind of just show how this looks on the screen, how everything is kind of applied, and then how we can go in and very, very easily run an exploration for this, or for any of the patterns that we've got. So in here, everything except for the line right here that I drew on the chart has been drawn by the add-on. So you've got all of the indicators, the moving averages, the T-line, all the moving averages that Steve uses, as well as the stochastics 1233. And what you're also going to notice, because I'm going to point it out, is you get all of these patterns that are just automatically drawn on the screen for you. So right here we had the left-right bullish. Here you had an engulfing bullish, and these are just kind of, you had your left-right bullish, you had a doji sandwich. All these patterns are just automatically drawn for you. So if it'll just point it out on here. The other thing that I particularly like about these patterns, I have a list that I'll show you of all of the patterns that are included in here, is we put in here what's called an expert commentary. So not only are they labeled, if I come into the expert commentary, it's going to put an arrow right here, which just means this is the day that we're looking at. And if I go back and I just want to kind of understand a little bit more about what is the doji sandwich and what it does, all I have to do is just click on here. Actually, I have to move the arrow just to that pattern right here, and it's going to say, and I can make this bigger so you can kind of help read, but the doji sandwich is a result of the consistent aspects of a human nature. It provides an extremely high probability result. The doji sandwich usually occurs after the initial reversal signal has been identified. The doji sandwich indicates more potential upside. Traders looking to take advantage of this trade should look to target resistance. Okay, so kind of gives you an idea of what the pattern is. Each of the patterns have a different definition. Right here, we've got the left-right bullish combo. We've got, if you see enhancements on here, it's going to tell you, okay, if I ran a scan and there's a bunch of bullish engulfing symbols or left-right combos, this is what I'd look for to make that a more powerful signal. I'd look for it to be the bigger the bullish engulfing signal is, the more powerful the new uptrend was going to be. So I'd look for bigger bars. Or if the signal occurs at a major technical level, like a moving average, a trend line, a Fibonacci, etc., the more powerful it will be. So those are automatically labeled for you. I basically, it's been a while since we put together the commentary, but I looked through the documentation that Steve put together for around the patterns, and that's how we kind of came up with the commentary. In terms of the patterns themselves, some of them are pretty easy to code, but I remember like these fry patterns in particular, we spent a lot of time actually coding. This product has been available. We're on the second version of it, but it's been available for probably 8 years now. It's been our most successful one-time product for Metastock in terms of an add-on. I remember we sent it over to Stocks and Commodities, and we had it reviewed for the first version. We had it reviewed by the late Dennis Peterson over at Stocks and Commodities. He gave it a very, very positive review. The second version was actually reviewed by Barbara Starr, and she looked at it and she gave it a very, very positive review as well. It's been a very well-received product, a very well-reviewed product. I'm proud of it. Let me show you how the scans work. I'm going to go ahead and kind of open up the Power Console right here. And what I'm going to do is I'm just going to kind of show you how scanning works in general in Metastock. This isn't hard to do. It doesn't take very long at all either. And what I'm going to do is right here in our Power Console, if you're not familiar with Metastock, well, there's the charting. This is a quote window basically. Our scanning, we call it Explorer. We also have system testing, forecaster, and option scope. But to scan, and all you're going to do is you're going to click on the Explorer, and all of the explorations that are put together by Steve are called CPS. So they stand for Candle Profit Systems, and you'll notice there's a handful right here. There were so many patterns that were available that we broke them into different categories. But if I highlight one of the patterns, it's going to tell me that this scan will look for doji at the top, doji best friend, left-right bullish, left-right bearish, et cetera, et cetera, et cetera. The J hooks, the major patterns, all of these, the power signals, all of these different ones will scan for different patterns for me. So what I'm going to do real quick is I'm going to run this Doji Dynamite scan. I could select a couple of these if I wanted to, but we'll just run one for the purpose of the demo. We'll run this Doji Best Friend, or this Doji Dynamite, which has the Doji at the top and the Doji Best Friend, as well as the left-right bullish combos and stuff like that. And what I'm going to do is I can can scan basically anything that I want. We get our data from Refinitiv, which means like if you're in London and you want to be able to scan your stocks on the London Stock Exchange, you can, or maybe you're in India, or maybe you're in Australia. We have tons of clients from like all over the world. In fact, you'll notice right here, available for scanning for me right now, I have 296,231 instruments that could scan right now. Now, I'm not that interested in doing a scan that large, but the point is that markets that you're actually interested in are going to be available. We get a lot of customers all over the world with our Refinitiv data feed. We've got a lot of users all over the world as well. So what I'm going to do here, though, is to kind of just run a real quick scan. I'm going to come down to index constituents. And what I'm going to do is I'm going to just find the list of the S&P 500, which is right here. Okay, it's already selected because this is actually a scan I run all the time. I like to scan against the S&P 500. So I'm just basically going to scan for any patterns that we had during the market today. So let's go ahead and start that exploration. It's going to run for us. I'm going to let it run here. It's not going to take very long. It does take a little bit longer when I'm sharing my screen and broadcasting audio and broadcasting video, because that's pretty network intensive. But even with all the stuff that I've got going on, you'll notice that we're almost about halfway through here. Not only are we almost about halfway through, you'll notice that we're rejecting 98% of the stocks. 99% of the stocks that it's looking at, it's like there's none of these patterns that exist. And that's one of the things I like about the scanner, is because as a trader, I like to look at optional stocks. I like to look at some ETFs. I like to look at things, but certainly like with trading in the US, you're kind of like spoiled for choice, right? If I want to look at just stocks that have options on them, I can run a scan against 4,500 instruments. Just the S&P alone, the S&P 500 alone has 500 and 5 instruments, right? So like, I want to be able to kind of ignore all the stocks that don't have an opportunity and focus on the ones that do have an opportunity that I can look at today, okay? So that scan's run. Okay, we had no doji at the tops today. You'll notice that it says doji at the top right here. This 0 signifies that that pattern didn't exist. Okay, there wasn't any doji best friends either. There wasn't any left-right bullish combos. We did have a left-right bearish combo. We had this, and then we had a sandwich, a bearish doji sandwich. We had 3 of those. So of these patterns that we scanned for, if we're looking for entries tomorrow, instead of looking at 500 stocks, we're only going to be looking at these 4 and deciding on the ones that we want. So let's go ahead and take a look real quick. We're going to look at this doji sandwich, the bearish doji sandwich. And what I'm going to do is I'm going to open up Federal Express Corporation. So go ahead and open this up. I'm not going to recommend that you buy this today because I can't. Or that you sell it or you go short. But if I apply the template, we could kind of take a look at where we're at here, and we could kind of make a decision for ourselves in terms of what we want to do. So I've opened up the chart and opened up the candle profit systems chart view, which will basically apply all the indicators for me. You can see we had a nice bull kicker right here. We had a scoop here, we had a bearish engulfing here, but there's that bearish doji sandwich that we're looking for. If I want to kind of take a look at the definition for that, I can go to the expert commentary and it'll spell that out again for me like we were looking at before. So I love the way that, you know, we can kind of look in, zero in on the stocks that have an opportunity. I love using this with Steve's patterns. And again, it's been such a well-received product, not only by the reviewers I talked about at Stocks and Commodities, but also by the people that, by our customers that use it. I remember back in the days, in the before times, I met up with a guy in Canada. I think it was at the Toronto Money Show a number of years ago. And I was talking about the candle profit systems and kind of a bit of a session I was doing up there. And he was like, yeah, it's one of my favorite things. That was probably back when we had version 1. We've added some improvements, some enhancements to it. It's just been a very, very cool product. I'd encourage you to try it. So in any case, Here's a list of the patterns that we identify, as well as like kind of like what categories that they fall into. We do have the single bar patterns. All in all, I think I added it up one time, and there's about 32, 34 different patterns in here. We talked about how it includes the commentaries and the scans and all that kind of stuff. So all in total, it includes 6 explorations. The expert advisor that identifies and labels everything, gives you the commentary for it, 3 different layouts, 36 different patterns, all of that stuff is included as part of it. The retail price that we normally do for the Candle Profit system is $499. Okay. In addition to that, like last year, Steve and I sat down and we recorded a 4-session course. These were 4 sessions that were over the course of 4 weeks. We did it over a 4-week period, and they're about, I'm going to say they're about an hour in length for each one of them. Some of them might be a little bit longer, some of them might be a little bit shorter, but the course that we actually put together around Candle Profit systems included 3 lessons that Steve did. Powerful profits for candlestick signals in the tagline, how to analyze big breakouts and the most powerful top rank signals. I did a session myself, which was just, here's how you use Metastock, here's how you run the scans, here's how you can kind of really kind of get to the nuts and bolts of things. This is a course that we basically retailed for $399 at the time. So what I'm going to do here today is I'm going to allow you, if you're interested in kind of getting set up with this, I'm going to allow you to get the Candle Profit System number 2, the training package for the 4 different sessions that we recorded. I'm going to give you, if you don't have access to Metastock, I'm going to give you our real-time Metastock free of charge for a month. I'm going to give you free data for a month, so you'll be able to kind of run the program and do all your scans and play with it. We're going to give you an Unleash the Power of Metastock tutorial that's going to help walk you through everything. We're going to give you that 4-part course, which is, I already talked about that. But individually, like if you bought this stuff, it would cost $1,247. If you just bought the Candle Profit System 2.0, that would cost you $499. What I'm going to say is part of the package that we're going to do today is I'm going to give you everything for $499. So, and not only am I going to do that, but wait, that's not all you'll get. No, I'm just kidding. But I'm going to back it with a 30-day money-back guarantee. So you can try it. If you're not familiar with Metastock, it's been rated #1 in its price category for like 27 years in a row. Right? We'll throw that in there with you. You'll get the Metastock program. You'll get the Candle Profit System, our most popular one-time product add-on. You'll get the training package. You'll get the Metastock. You'll get Unleash the Power of Metastock. And if you get all of that stuff, and even after 30 days, if you're not happy, you're not finding yourself better trades, well, then you can return it, and we'll give you your $499 back. So that's kind of what we'll basically do for you. Give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat. I do see some questions coming in. I'm going to answer those for you. And let's see. Mike says, great presentation, Steve. Yes, he does a great job. Jose wants to know, do you plan to launch a new book deepening the candlestick techniques? Steve, you've got a number of books available already. And I've read 2 of them. One of them was about Santa Claus. Would you have a book that you'd recommend?
There's 3 books. The basic one was published by Wiley & Sons. The one that you really want to get, if you want to get into the meat, is called High Profit Candlestick Patterns. And then what most people have a problem with is, even though you might have learned a good trading system, you still have to keep your emotions out of your trading. So I wrote the 3rd book to kind of demonstrate what you want to do with the patterns to keep your emotions out of your trading. So there's 3 books out there. I would recommend, if you're going to start, you start with the High Profit Candlestick Patterns. And I would recommend you buy it off our website. It's about half the price of what you could buy on Amazon. So anyways, those are at 3. And then
And then don't forget the Christmas one.
Yeah, the who is Santa and how do you get to the North Pole? That's a what do I say? A historical biography of Santa Claus. No, it's not. It's a whimsical book. So, but anyways, high profit candlestick patterns is probably the one you want to start with.
Okay. Let's see. Jose says thanks. Let's see. Lee wants to know if you can scan for a specific price range. Yes, you can, Lee. It's very, very easy to set that up. We don't have the other scanware looking for options that have high open interest right now, but that might be something that comes along the line later. For scanning for a specific price range, hey, I want to find stocks that are between $5 and $10 or whatever that have a certain volume. It's actually very, very easy to do. I actually wrote up instructions on how to do just that scan on our blog. So make sure you get a copy of it when you sign up, or if you want to email me at jeffrey.gibby@metastock.com, I'll dig that up and send it over to you. Lee wants to know, let's see, Mike has a problem when he scans that he's getting a Metastock file error. Mike, I don't think I can help you with that one, but just go to metastock.com/customer, and somebody that's a lot better at kind of resolving that issue can help you do that. So metastock.com/customer, click on the little chat button, and they can get you squared right away. They do a great job too. Lee wants to know, is there ongoing monthly payments for this? For Metastock, there are. For CPS, it's a one-time cost and you own it forever. Metastock, we have monthly payments that start at about $59, which include both Metastock and the data you need to run Metastock. So that's not something that you have to worry about within your evaluation period, because I'm throwing that in for free. But after your evaluation period, it'll be at $59, up to, depending on what you need and what you want, it'll go up from there. And so to find out kind of exactly what that looks like for you, and based on what, it can also differ from exchange to exchange, just give us a call, 800-882-3040, or metastock.com/sales-chat. Jose says, thank you. You're welcome, Jose. Thank you for coming today. That looks like the end of all the questions for me. Oh, Lee has a good question. Can it be run on a Mac? So our marketing guy, Greg, his title is Metastock, which is why I keep calling him Metastock, is actually runs it on a Mac. We get that question a lot. I will say that it is a Windows-based product, so it works actually really, really well on the current Windows or Intel-based architecture that Apple's using. It does require that you use Parallels or something like that, as well as in as a Windows product. So it does require Windows 10 as well. So, but if you kind of are okay with that, it'll run actually very, very well on a Mac. So, Steve, thank you. That was a really good session. I appreciate it.
Well, thank you.
I want to say thank you.
Me. Yeah.
Of course, anytime. We love you. For all of you guys that came, I want to say thank you for coming. I hope you learned something. I hope it was helpful for you. If you're watching this on the YouTube, either now or in the future, do please like and comment and subscribe. It does help quite a bit. I hope to see you at the next one, and stay healthy, stay well, and I'll see you next time.